you give 45 million to block, right? $45 million to a handful of journalists. What could go wrong? $15 million to one influencer who will remain nameless that everybody knows. And, and then you give it to every politician on both sides of the aisle. And then you give it to all of the academics. I think it'll be probably 3 to 5 years before we know the extent of that corrupt money. But I don't think that there are many people that weren't tainted. They went to pretty much every crypto influencer, every journalist, every politician, every entrepreneur, everybody every educator, everyone that would take their money, every celebrity.
Mm-hmm.
Right. So, just about anybody that would take their money, they went to them. And, if you read the FTX Ventures, it's awful for anyone that had their money stolen from them. And it's not good for Bitcoin because billions and billions of dollars of Bitcoin was stolen and / destroyed, right? I send you $20 billion to buy Bitcoin. You take the Bitcoin, you steal the money, and the Bitcoin doesn't get bought, right? Or I send you 20 billion worth of Bitcoin and then you loan it out to someone that invested in Terra Luna, and Terra Luna goes to zero, and then the Bitcoin never comes back, And so what happened? They converted the Bitcoin into Terra Luna, or converted the Bitcoin into FTT or the equivalent, and then that went to zero, right? So
Michael Saylor, CEO of Microstrategy and one of the biggest Bitcoin believers, finally came public and started destroying all the bad actors involved with the FTX scam. In this video, you will hear brutal truths about what happened that the media don't want you to know. And this includes exposing who got the money from FTX. So pay close attention until the end, as this video will be fire. Before we get into the bloodbath, was there a positive moment for Bitcoin in 2022, according to Michael Saylor? Let's hear what he has to say.
The most positive thing of the year is the emergence of Bitcoin as the institutional grade digital asset, and the clarity that has arrived to the mainstream media and to institutions and to the government, that there's one crypto asset that's a digital commodity. I think Bitcoin is that commodity. At this point, it's been iterated by the chair of the SEC, and it is now just iterated by the chair of the CFTC. We saw a speech by the Secretary of the Treasury, Janet Yellen, reciting the legend of Satoshi. We saw the chair of the SEC sitting in a cabinet meeting with regulators from a dozen or more different agencies, reciting the legend of Satoshi. We've seen senators and congresspersons referring to Bitcoin and the virtues of decentralization. I think we went in 2 years from people on Twitter lamenting the lack of mainstream coverage of Bitcoin. There was no coverage at all, to a point where we saw 5 stories in a single day on the front page of the Wall Street Journal. And we saw stories about the industry, go to the New York Times, the Journal, Forbes, Fortune. We saw the spin up of Bloomberg Crypto. It's clear that there's been a lot of crypto carnage and a lot of broken glass and a lot of pain for Bitcoiners, even more pain for non-Bitcoiners or crypto token people, right? Where they watch their Terra and Luna go to zero, and a lot of crypto banks closed their doors and went to zero. So we have seen a crash to zero of lots and lots of things in the ecosystem. But I think this is a necessary maturing process for the industry.
And now, What was the biggest disappointment from the perspective of someone who has been working hard to get this asset class to the mainstream?
Negative effects of having the crypto economy meltdown as we knew it was going to, but all of the people in the Bitcoin industry that are doing the right thing, that are working to grow the industry, have been slimed by their association with the rest of crypto. Right? It's like Do Kwon decides to buy some Bitcoin and screws up the Bitcoin market by blowing up a $60 billion complex. That's been a negative thing. The explosion of Three Arrows. And, well, I mean, what really makes you angry? What makes you angry is all the crypto neo banks and wildcat banks that collected people's money, or either got people's Bitcoin or they got their money to buy Bitcoin, and then they either never bought the Bitcoin or they bought the Bitcoin and then panic sold or sold the Bitcoin in a fire sale as they were being forced liquidated. But it really makes you angry when you read about, you know, say FTX that collected billions and billions of dollars but never bought the Bitcoin, actually. So why is this a problem? If FTX stole billions of dollars in a BlockFi and Voyager and Three Arrows and Celsius and Terra Luna, if all of those ecosystems basically collected people's money and then lost all the money, then people that legitimately wanted to own Bitcoin had their money stolen from them. You have the very careful Bitcoiners that bought their Bitcoin and still have their Bitcoin. And then you have a lot of more casual Bitcoiners that maybe they bought the Bitcoin and deposited in Celsius to get some yield, and now they lost their Bitcoin. And I think that that's tragedy. I mean, it's bad for them, right? It's awful for anyone who had their money stolen from them. And it's not good for Bitcoin, because billions and billions of dollars of Bitcoin was stolen and / destroyed, right? I send you $20 billion to buy Bitcoin, you take the Bitcoin, you steal the money, and the Bitcoin doesn't get bought, right? Or I send you 20 billion worth of Bitcoin and then you loan it out to someone that invested in Terra Luna, and Terra Luna goes to zero, and then the Bitcoin never comes back, you know? And so what happened? They converted the Bitcoin into Terra Luna, or converted the Bitcoin into FTT or the equivalent, and then that went to zero, right? So that kind of makes you mad.
But who got the money from the bad actors? Who benefited from all of this and should be held responsible for the FTX growth and the scam propagation?
A lot of crypto influencers, a lot of Bitcoin influencers, and they were sponsored by Blockfolio and FTX and Celsius and some of the other players in the space. If you were sponsored by Voyager or BlockFi or FTX, and then someone decided to use one of those, then they've suffered. I think the Gemini Earn product, right, where people actually bought Bitcoin through Gemini and then they transfer it to Genesis, and Genesis generates yield by maybe loaning it out to Three Arrows, and Three Arrows loses it and Genesis can't pay you back. And that's a low point in the industry. It's a growing pain. It's a brutally expensive market lesson, but it just reminds you of the corrupting influence of the industry. There are so many people that are counterfeiting money, or they're just stealing the money. And the advantage is to the counterfeiters, right? FTX invested $5.6 billion in FTX Ventures. They must have spent another $2 billion in marketing or more in the 2 years. So they poured about $7.5 billion into the economy, and they did it by, in essence, counterfeiting $10 billion or more worth of tokens like FTT and SRM, and they boosted Solana, and they boosted Maps, and then they went and they borrowed real money You know, they borrowed as much as they could, posting that collateral from counterparties that, you know, like they borrowed from BlockFi and, you know, borrowed from Voyager and probably borrowed from Three Arrows, or they borrowed from anybody that would have made a loan to them. And then they borrowed from their own depositors at FTX. And of course, they then raised billions of dollars from outside investors. And they took all that money and they in essence corrupted everybody they could, right? So you give 45 million to Block, right? 45 million dollars to what, a handful of journalists. What could go wrong, you know? 15 million dollars to, you know, to one influencer who will remain nameless that everybody knows, and you know, and then you give it to every politician on both sides of the aisle, and then you give it to all of the academics. I think it'll be probably 3 to 5 years before we know the extent of that corrupt money. Anybody that would take their money, they went to them, and you know, if you read the FTX Ventures spreadsheet, it's like 8 pages long, and they invested something in hundreds of things, right? Hundreds, you know, it's hard to figure out who in the industry didn't end up with some of that money. So the counterfeiters have an advantage in the war over the sound money people, right? Nobody's taking $7.5 billion of Bitcoin and using it to taint politicians and taint the media, because it's $7.5 real dollars, right? It's hard to come by that money. But if you just gin up $7.5 billion worth of, you know, FTT token, right? That's made up money. I mean, Sam pretty much created that money in 12 months, maybe 18 months max. In order to create another $1 billion, he just needed to manipulate the price up $3 a token. How hard is that? Not hard at all. He basically took the money from his own customers off the exchange, traded it with himself, manipulated the price up $3, declared $1 billion worth of earnings, and then went and spent it. And how he spent it, he bought everybody. So I think that's the negative. I guess the positive is we got lucky that FTX blew up, because they were very close to bribing, you know, or corrupting the entire establishment, right? We'll see just how far they got, but I mean, some of the bills in Congress, they were driving to get light regulation in DC and then funnel crypto exchange fees into the regulators.
So, according to Michael Saylor, politicians, crypto influencers, Kevin O'Leary, and many other celebrities benefited from all of this. But what if this was part of a bigger plan from the beginning? And while it was all happening in front of everyone's eyes, where were the regulators? Why did they even allow this to happen and get to the point of possibly no return?
People are running through your neighborhood, you know, shooting the children and burning down the houses and stealing your cars, you know, and murdering your dog. You would say, where are the police? Why don't they show up, you know, and install some order? You know, that the real issue here is the regulators need to enforce the law. And what you've got is a lot of people that are lying, cheating, and stealing. Mm-hmm. And the regulators have been very slow, very ineffective in enforcing ethics and the law in the industry for whatever reason. So the result is the market ends up, you know, enforcing it. You kind of need your own vigilantes, right? So you end up with the Bitcoin maximalists pointing out the scams and the frauds, and they stand up and say, look, we're just not going to let you abuse people like that. And so and they pay a personal price to do it. But I think that happened. And then you have, you know, the order of nature, right? The natural result, which is if you insist upon acting irrationally and irresponsibly, right, long enough, like Sam basically gets high, steals the family car, goes on a joyride 180 miles an hour. Maybe the police didn't stop him, but he wrapped the Ferrari around the tree. See, like that's what happened with FTX, which is they took the car off a cliff. Why? Because they were high and they were going too fast. Everybody, you know, was kind of just getting high on infinite leverage, and there were no cops on the beat, right? And they got out of control. And so as soon as there's a little bit of pressure, the little pressure was the Federal Reserve funds rate, right? If you look at what really catalyzed or tipped this off, and we go to 1 year, the 1 year yield on a U.S. Treasury bill in the last 12 months went from 26 basis points all the way up to 470 or 480 basis points. So as the free money environment started to come out and you started seeing some pressure on the entire ecosystem, the first thing to crack was Terra Luna. And then the next thing to crack was Three Arrows, which was, again, ridiculous leverage. And then the Three Arrows thing really mortally wounded all the crypto hedge funds, I think, and it mortally wounded Alameda. But it took another 3 months before we saw that filter, and it's still filtering. Right? We're still seeing the depths of that because we're staring at Genesis, wondering what'll happen with Genesis. There's 34 days or something since they froze out or locked their redemptions.
We're almost over, but Michael still goes hard on SBF and what he should have done if he did things right.
A disinterested CEO of a crypto bank that was honest and competent would have lent Alameda somewhere between $0 and $10 million.
Right.
Like the number is not one order of magnitude less. It's not even 2 orders of magnitude less, right? It's somewhere in the range of 3 orders of magnitude less. If you were honest and competent, you would basically say, well, what is 5% of the honest trading liquidity in the token? If the thing trades 100 million a day, but 80 million is wash trading, there's 20 million a day. Well, how much of that is trading on another exchange, not your own? Oh, 3 million a day. Okay, so $3 million of this stuff trades on another exchange. Is that, can I trust that one? No, they're not. None of them are regulated. Okay, how much trades, on any regulated exchange? Well, of course, none of it, right? But let's say I threw out the issue of a regulated, transparent exchange. I just said, well, how much trades on an exchange other than one you own? 10 million. Okay, I'll give you 10% of that. I'll give you $1 million of collateral value. Okay, how much could you borrow against $1 million in collateral? Well, the max is 50% loan to value, 50. So I will give you a $500,000 loan against $8 billion of FTT token. That's the right answer if you're honest and competent. Okay, what could go wrong? Well, when you have 3 related parties and a biased, incompetent, dishonest person, what can go wrong is the entire thing gets burned to zero. And is that likely? Yes, highly likely. It's not even just what could go wrong. It's highly likely. That's the reason there's a stigma attached to related party transactions. You would never want the CEO of a bank to be issuing loans to a private company that they owned, right? I mean, like, if it turned out that the CEO of JP Morgan was issuing billion-dollar loans to, to Jamie Dimon, real estate development company, jointly owned with him and his wife, right? People would just lose it,
yep.
Right? For obvious reasons.
What's your take on all of this? Who's responsible for all the pain happening right now, not only to the families who lost everything, but also for the crypto space affecting everyone? Let us know in the comments below if you agree with Michael and your take on this subject. Thank you so much for watching. Please remember to leave a like and subscribe for more daily crypto videos like this. Thanks.